The talk of the town today is the rejection on Bitcoin, this big beast right here. What does it mean for Bitcoin and the macro bull market that we have found ourselves in since November for Bitcoin and, of course, October for the stock markets, just based purely on the data, because that's what we do here on the channel. Study the past, to forecast the future. It's your home of macro cycle analysis, studying crypto, Bitcoin, stock markets, and of course real estate as well. And just for you guys that got back to me yesterday, I've got a little bit of metals to give to you, gold and silver. But first, we got the big rejection here at the 50% level, as we covered in yesterday's video, going right through there at 28,400. And yeah, if you remember from yesterday, we were looking at that being the level that the market, in this case Bitcoin being the market, needed to get above and consolidate for the confirmation that we've seen enough of the accumulation or the consolidation at lower prices to then get back above. This particular rejection isn't as fearful, as scary as the previous rejections that we've seen. And we'll get into that in a little more detail. But first, I just wanted to say it's basically we're looking at higher highs and higher lows compared to what we saw last time. Lower highs and lower lows. This time we've got a slightly higher high and higher lows. So there are your higher highs, there are your higher lows. But of course, let's start with what's going on in the macro markets and build our way up to the overall picture, of course, to improve us as investors and traders, whether we're part-time or full-time. But if you are either, make sure you hit the like button and subscribe to the channel. Click the button down below. You know the deal. Let's kick it off with some of the data that's coming through for the S&P 500, the breadth. I won't go into this too much. We've covered it a lot in previous videos, but I'll give you enough so that you've got a picture of what's going on right now. The breadth was a huge topic over the last several months. What does that mean? Basically, the difference between the number of stocks that are making new fresh highs or moving up compared to the ones going down. And everyone, whether you're retail or big players or even a beginner to experienced professionals, everyone was talking about that the fact that these markets, the S&P and the Nasdaq, were only going up because of 7 stocks. Now you don't hear anything about it except from my channel here, because it's important to remember the data that we have seen. And like we were talking about with the breadth before, the big deal everyone was making that the market was only going up on 7 stocks really didn't matter because the market was going up. And if you buy low and sell high, it doesn't matter about what the media and the news is telling us. So we want to look at the health of these markets. And of course, we covered this yesterday, just going through it, updating it so that we can keep abreast of the macro cycle, because things change on a daily basis and the news fears us out of positions all the time, or the media or the perma bears, of course. But has anything really changed in the macro picture? So what we saw in the last 24 hours there is your first October bar for the S&P 500. It was a mere 0.08% negative compared to the previous trading session. Just 0.08. Can we still fall lower? Of course, this is your up, down, sideways scenario. But this, what I pointed out on the channel, is this is looking like a pretty good foundation for a low to be forming. Did we see the low on the 27th of September? Honestly, I don't know. But what I do believe, based on the analysis, is I see a low forming around 42, maybe even 41, because that's the previous 50% level, the major 50% level there. Basically, the low is forming from this mega move that the S&P 500 has had, moving into those recent fresh highs of the last year and a half, up to 46. So we're now at 43. Like we covered, a single-digit drop is pretty normal in a bull market for the stock market. 7.7% from the high to the low, and probably currently sitting at around 7% drop from that high as well. The next target for the S&P 500 is 44.21. Move back above that and a close above it. You'll be first to know that that is looking like a more stronger sign of strength, even though we're still below some of the previous highs. Getting back above that first 50% level is a good start for the market, at least for the bulls, to show that yes, this is a low forming in the market, and we'll potentially start to see it grind out, just as we've covered when it came to the quarterly and the pre-election year as well. How does this look on the weekly? Not too different. Obviously, it's one trading day. The market's still above the previous support levels. We drag it out to the top. Then you've got 44.55. So the first target, 44.21, call it 22. Next target, 44.56. Okay, so we're not too far off those levels. And like we've said, probably needs a little bit of time. Nothing too out of the ordinary. For the Nasdaq, it's looking slightly stronger. It looks like a pretty reasonable, for now, double bottom forming. Haven't got the confirmation just yet, but you can see the market has just nicked the previous low, taking out potentially some of those stops, which is normally a pretty good sign if you want to get in closer to the bottom of that range to then get into your double bottom positions. Now, of course, if you're getting closer, you run the risk of the market stopping you out because you have less confirmation, but you're getting in closer to the lows. That's just how trading works. It's a balance of risk and reward. If you want to wait for the full confirmation, you'd wait for a break of that high there at 15,720. But let's look at the 50% level and the first level that we want to see these markets get above, at least for the bulls, to start to consolidate, to then build back again, move into that third quarter of 2023 and continue up with the bull market that has been going on since October 2022. Now we're nearly at 12 months since that low, and you still have a lot of calls of recessions and so on and so forth. So we start to move our way higher is 15,153, looking out for that hopefully sometime in October. And then the next target you've got is actually the 50% level to the top of this run, 15,325, and then you would look for the previous resistance there at around 15,700. So that's what we're looking at for the S&P 500 and for the Nasdaq as an update of where the markets are structurally. Nothing has changed for these in terms of the bull market, which obviously means it's still pretty good signs for Bitcoin as well. Before I move on to metals and the US dollar, which is obviously having a pretty good run as well, and then of course Bitcoin, let's have just a quick look at the breadth, as I brought this up earlier. And everyone was worried about the breadth. The market's only going up on so many stocks. Now we're seeing a lot of the breadth gains reduce, meaning that the stocks are coming back down. They're basically having a bit of a sell-off. That's what happens when you make a lot of profits to the upside. You need to sell some, or at least the big players need to sell some and balance out their portfolios. Unfortunately for a lot of the bears, they are hoping for lower prices, but what does the data say? Not just the hopes and dreams, or not just the economic news that a lot of people turn their attention to. What is actually happening in the data and in the charts? That's the facts, not the other stuff. So what we're looking at is a rough couple of months for the average stock. Over the past 50 days, an average of 25 more stocks in the S&P 500 have declined than advanced. So we're seeing more starting to decline than advanced. That's one of the most extreme readings in the past decade. So this is going back to about, what I'm saying, 2014. Now, if the last 10 years are any indication, the backtest engine shows abnormally high returns across virtually all timeframes. This is the signal here where that breadth has reduced. And like you can see, over the longer term timeframes, we're going to get to this, the 6 months and the 12 months, the 1 year, of course, you see abnormally high returns across all timeframes. Look at how many times the signal was going off in 2020 at the pandemic drop. Then you had the late 2018 drop, another scare there. This was where everyone, if you weren't in the market, a lot of people were talking about this was the collapse. That was going to be the peak of the market. And that's when we had to collapse. Didn't happen. Then you had the other scares back in 2015 and then throughout 2022 as well. Remember, we're not as concerned with the short term. We're looking more at the macro picture here, the longer term, because yes, you can still see that this did drop a few months later from those lows. I believe it was around, I think it was that March or the around those lows there in May, and then it dropped into September, and then you had the bottom forming, and away we went. Sorry, June and September. So what does the data actually say? Well, let's have a look. 6 to 12 months later, average return 16%, and then 1 year later was 33%. That is pretty big. Median return, let's just bring it down a little bit so we're not so moon boyish about the gains that can be had in the stock markets here. Median returns 15.6 and 27%. Win rate, that's a ridiculous win rate, 90 odd percent. So we're seeing the breadth drop, but over at least these last 10 years, from each of these low points in the market, it has been a mother flippin' buy the dip opportunity. Sure, you could say, well, this wasn't enough here. I think this was the May drop. But if you look forward May to the next year or March, you're not that far off. So you could say, well, this was a loss. Okay, cool. But there's nothing that's 100%, just like this is showing, about 9 out of 10 times. So about a 90% hit rate over almost all time frames. Forget the 1 week. We're not here for those sort of gains, okay? So this is looking pretty good, which means it's potentially looking pretty healthy for BTC as well if we have a longer term time frame than the day-to-day movings of Bitcoin. Now this week at TIA Crypto, it is our free crypto and economic report. So you guys should have seen that in your email inbox already. If you want to get on board for the next one that comes out, link is in the top of the video description. Otherwise, if you do subscribe to that now and you've missed out, you can always find the link on your email, and there is a list of all of the back catalog here of all of the previous newsletters that have gone out under TIA newsletter. So that's what you get for free as well. You've got all the trading results from other traders. So congratulations to you guys in the last 24 hours, making very solid profits, 43, 7, 21%. And you guys from last night as well, 40%, longing on Matic. And what else did you long on? 95% there as well. So great work to you guys. Plenty of stuff over there. Let's keep going with what's happening in BTC. This is what we've seen all over crypto Twitter, or ex-Twitter now. You've even got the bulls talking about how bearish this market looks. But this one comes from a pretty big account here, 350,000. I mean, drawing a diagonal line across tops, there's really no parameter around how you draw that line. So you can't backtest these sorts of things. This is what I don't like about technical analysis, or at least what people tend to portray as technical analysis. You need to have parameters when it comes to TA. So I would rather look at connecting a line to the tops, and this actually comes down. I'll draw that actually straight on your Bitcoin chart here. And you can see from the top to the next significant top here, the market has actually broken above it, tested it, and bounced away from that diagonal, which is very different to what Rect Capital has here. Nothing against them whatsoever. Okay, this is just the way I believe TA needs to be done. You need to have parameters because it's about being a bit more scientific than just a randomized line across tops of markets to then show something that might be bearish. But they're not bearish at all. Nothing to say there. Let's get back to what's going on with BTC and the levels that we're looking at. We've got a big rejection here, but remember we're in an uptrend here for BTC. Higher highs, higher lows. You can see the exact swing chart here, link to that, you know the deal. Video description, TI again, swing indicator. This one helps us identify the strict definition of trends, uptrend, downtrend, or an uncertain trend. In the case of the daily, we're in an uncertain because in the shorter term here, lower lows, higher highs, that's uncertain. But if we drop it down to the 4 hour, we're at an uptrend. We have a green indicator right here. So this does this automatically. Let's move it up to the weekly. It's also in an uptrend. You can see the higher highs, higher lows have formed already. Bring it back out to the longer term time frame. Still in an uptrend. It's green, only just, but it's still green. You got higher highs and slightly higher lows. So this does it all automatically as well, which makes it so much quicker to flick through charts, look at multiple different time frames, and then get on with finding which trades are good ones to get into and which ones you should probably just pass on. So let's take it back just to the shorter term again. Look at these levels. Even though we've got a pretty decent rejection here at the 50%, 28,400 is that key level that we're looking for. Like I said, the trend is up for now, looking at those major highs. It's broken through this particular high here that came in August. I think that was off the back of some ETF news. And now we're basically finding ourselves back at those levels. To the downside, let's play devil's advocate. For the market is to go down a little bit from here. We still have the 50%. For potential support, 26,750, and then the level that the market has broken through and then come back to test and bounced away from, which is this white line here at roughly 26,300 as well. Now, if the market in Bitcoin in this case is to break down from those levels, that would be a key level for Bitcoin to hold up above for the confirmation and continuation of the uptrend. If that level breaks, so you want to go to around 26 to 26,300, then that spells more trouble for BTC and a likely retest of these lows, and potentially could go lower as well. But for now, even though this has been a solid rejection, nothing has changed. It's the same deal that we saw over the last few days with a pretty strong run up. And if you've been around in the markets for longer than a few weeks, you know that after reasonable moves, you need to have some sort of pullback. There's going to be some sort of profit taking, especially when you get to resistance levels, and especially that 50% level. All right, so keep that one in the bag. Now, we got the US dollar, the big one that everyone's been banging on about because it has gone up. By all means, they should be banging on about it. We've had 3 months, well, we've had 2 months up. We're into our third month up now. And sure, we've still got 28 days to go, but the price has gone higher than September. So even if this closes all the way back down, as long as it's above the low of September, it's still going to be an up month according to Gann's rules. It may be red, but it's still going to show a higher high and a higher low. What we have covered before with the US dollar, going all the way back throughout the entire history of the US dollar, is in the second half of the real estate cycle. Stay with me here. This is where we currently sit, and I'll go through it in future videos. This video is already long enough. Typically, it takes some time for the US dollar to top out and then start its big move to the downside. You can see that happen in the second half of each real estate cycle, which is what we are currently in. We should see the US dollar continue to fall, not on the back of bricks or anything else like that. It's just typically what happens. So we need to look at the bigger term and the shorter term here. What we did see on the fundamentals, the news told us this was the top. It was all banging on about everything's going up and the US dollar is going to explode. Then the news told us that this was the bottom, which we covered on the channel. They were getting really, really fearful about the US dollar, bringing in bricks and everything else like that. And we talked about that specifically. And look what we've just seen, the move back to the upside. So that's what I'm looking at when it comes to the fundamentals here. Where is the US dollar going from here? Depending on the time frame, it's still in an uptrend. So we have to expect that we're still going to test some higher prices. Let's have a look at some of those higher prices. Well, 107.2 is that key 50% level. It's coming up to test that now. And then the level of the breakdown was roughly 109.5. So that's where the market started to break down late last year, which also coincided with the Bitcoin low. So there's a lot of comparisons with Bitcoin and the US dollar, and that if the US dollar is going up, therefore Bitcoin must go down. But I've just labeled out here the previous cycle as well. There was the low in 2018, and there was the top in November 2021. There's not that much difference. The US dollar did go up, it did crash, and it did come back up. And there's not really that much difference in the price. So far, we've seen the Bitcoin low come in at around the peak of the current price of the US dollar. So it can still run up, and we could still have a bit of a choppy market over this period of, say, the next 12, 24 months, and Bitcoin can still be in a macro bull market, because if we then step out more than a few months and go into multiple years, like we have done in the previous cycle, it's the peak in 2000, and the US dollar continued to stay up in 2001, 2002, and then had a very significant collapse. Meanwhile, the stock market rose, property prices rose, metals rose, so commodities rose. That's the US dollar crashing out over many, many years. But it took roughly 1.5 to 2 years at that top level. Even though it topped out, it just had that topping pattern and had to come down. So maybe that's what we're in the midst of now. We've been just over 12 months since that peak in September of 2022. Maybe we have a little more time here to find out that the dollar will potentially go down longer term. That's just based on my own cycle analysis of the past. But it doesn't mean that we can't see some upside here for the US dollar, testing 50%, testing previous support levels that may become resistance. And of course, what solid area to do it from, which was basically a resistance level, and it's bounced off that, being 99.5 to about 100, which is also a good psychological level as well. So that was the previous tops in the market through 2015 into roughly 2020. And of course, broke through that, coming back and testing that upside. Of course, anything can happen from here. We start to break above that level around 107 to 109 and start to consolidate. Then, of course, well, US dollar is going to have to come back and test those higher prices there at around 114, 115 as well. So hopefully that's covered a fair bit with the US dollar for you. Shorter term trends are up. Must test those prices to the upside. If you start to see this falter over the coming weeks and months, not just the day to day when everyone's sort of getting up in arms about the move up and then the test and all that sort of stuff, but weeks and months, then you'll know that we're probably seeing a test and then a drop to the downside. But of course, longer term, we're looking big timeframes here, months and years. This could play out over a couple of years. So keep it in mind, that's what we specifically looked at the time in September of 2022. The videos are on the channel. Like and subscribe. It's home to macro cycle analysis. And of course, if you wanted to get that free content there, weekly crypto and economic report, trading guides, discounts, link is in the top of the video description. That's all I got for you today, guys. Remember, the worst crime that any analyst can commit is remaining bearish in the face of a rising market. And the S&P is in the face of a rising market. The Nasdaq is bullish. Don't remain bearish in the face of a rising market. And for the case of BTC, it's in the bullish camp in a rising market. I hear what you're saying about the US dollar. Let's keep coming back to that and keep our eyes open on that one as well. Peace out until next time. Take care.